In this video, we'll meet Kartik Desai, Principal at Asha Impact. Asha Impact is a platform for business leaders to work on development challenges by providing impact investment funds into scalable social enterprise. Kartik will share some advice to social entrepreneurs looking to raise impact investment funds.
My name is Kartik Desai, and I run the team here at Asha Impact. Asha is a combination of an impact investment advisory platform as well as a policy advocacy trust. So essentially it does two things. It deploys capital on behalf of these HNIs into for-profit scalable social enterprises, and we take the learnings from these business models and engage in targeted policy advocacy with the Indian government to basically scale up some of the lessons from these inclusive business models. I guess a couple of pieces of advice, right? First, I would say that having a clear focus is very important. So they should really know what sector they want to be involved in. You can't try to do everything for everybody, right? Or as we say, boil the ocean. There's so many problems to tackle. So the best entrepreneurs that I have found in my experience are generally those who are literally willing to dedicate a lifetime, not necessarily to just one business, but to one industry, whether that's education, whether that's health, whether that's technology, whatever it is. So that's one, focus on one area, and really it'll take you at least 5 to 6 years to really build something valuable. So unless you have that sort of commitment, it's not worth it. So the second thing that I would say is that the focus should really be on how do you deliver a service profitably to a low-income customer, at least in the Indian context. That is really the key, right? Delivering a service or selling a product, and how do you do so profitably? So that has to always be your underlying focus. So these are the two basic pieces of advice that I would give to any aspiring social entrepreneur, that focus on a particular area, focus on specifically how do you deliver your product or service profitably, and third, focus on building a very high quality team and an organization. When an entrepreneur approaches an investor, in terms of specific documentation, yes, it is always helpful to at least have what I call a pitch deck, a proper detailed presentation which lays out his thought process, right? And I don't need to go through the specific table of contents of that. There's many approaches that one can take, but the basics of the business on paper. The reason that's important is because it also conveys their clarity of thought and the basic idea that they're talking about, which is then complemented by what they speak to in the meeting. The second thing is basically the financial model. It doesn't have to be a very detailed one, but at least you need to be able to show that you've thought through the numbers. So that's always helpful. And thirdly, it's not really about the term sheet. That's something that you will discuss with the investor, but at least as an entrepreneur, I would advise you to be familiar with the basic set of terms, which are not that complicated or different. It's almost like an industry standard now. So you should be prepared to understand and discuss with the investor what are your expectations around the role that investor would play. Typically, a venture capital investor would take a minority stake, but he would expect, especially at an early stage, to have decent involvement in the business, right? What are called affirmative rights. So, having some influence over the decisions the company makes, as well as having board representation. So it's good for you as an entrepreneur going into that meeting to at least know how you feel about those things and to be aware of those things. And finally, and most importantly, I would say many entrepreneurs don't do this. It's not so much about the documentation that you bring to the meeting, but the documentation which you already have incorporated in your company, which in a nutshell is, let's call it compliances. So as an investor, I don't want to just invest in a company which is not even incorporated, or the entrepreneur doesn't even have an idea of the difference between different structures, whether it's a partnership, whether it's a private limited, whether it's a not-for-profit. So you need to be very, very clear on your business model and your organizational structure. As long as you come to the meeting with that clarity, all documentation that you really need for a discussion with the investor is the pitch deck, which can explain a lot of these things. Millions of people have good ideas. Your idea is not that unique. Accept it. What's unique is your ability to execute that idea and how thoughtfully and how systematically you do that. And the capital raising strategy that you have is a part of that. So select the right investors. In your desperation to get capital, many people end up with investors who later on they regret. Be systematic, be thoughtful, be slow, and trust me, if your business model is right, the capital will come and find you. So don't worry about chasing investors. Focus more on proving your proof of concept as you're getting started. Globally, the social enterprise sector, as it's called, is fairly new, right? Maybe a decade old. And it's been growing. It's very much at an inflection point. It's starting to see increasing attention from the public, from policymakers, from students, from professors, from corporates, from society at large. At the same time, it's also being questioned. that what exactly is it, because it actually represents a continuum or a spectrum from soft, not-profit capital to fully commercial capital. And many people conceptually don't really get it, that how can you actually do good and at the same time make returns? How much returns, can you make, and so on and so forth. So the first thing I would suggest is accept that. Accept that ambiguity. It's not like there's always going to be a silver bullet definition. You're operating in a sector which by definition is interdisciplinary. So accept that. Secondly, realize that it's a new sector and it has a long, long way to go. So you're right at the beginning, right? So be humble. That would be my second advice. Really put your head down, focus on your business, focus on your sector, and focus on executing, building a good team, and delivering value to your customer, right? Thirdly, and then the what we've been discussing mostly here is the financing side and the equity raising and so on. It is important, so I'm not trying to belittle that. Yes, if you build a good business, the capital will come, but the good news is there's increasing amount of capital that is being unlocked, that is flowing into the sector every single day. Traditionally, it was mostly development finance institutions who started investing in the space, and foundations. Increasingly, many high net worth individuals, many family offices are bringing an increasing portion of their capital into impact investments. More and more millennials from wealthy families, as they grow older and who are taking over their family portfolios, are very, very interested in this space. So it's only going to grow. Large commercial financial institutions, the Goldman Sachs, the Credit Suisse, JP Morgans of this world are all also involved in impact investment. There's a policy dialogue going on at the highest levels of the G8, including as well as in countries like India. So all of this basically means what? That look, there's a lot more capital that's going to flow into the space. You're in the right sector, but you need to really, keep your head down, because the challenge is on the demand side as well as supply side. Supply side is how do we unlock more capital? That's happening. Demand side is how do we address the capacity of social entrepreneurs, because there's many, many social entrepreneurs, and not all of them are going to get funding. So you have to really focus on making sure that you differentiate yourself, you have a strong team, you have a very good business model, and you have some actual results and proof of concept and traction on the ground. If you're doing these three things, sooner rather than later, you will find that right fit and find that right investor.